live stream. Oh, maybe I'm not live. There we go. I am live now. I'm officially live on on YouTube. Clearly I have issues. Here we go. How's everybody doing this week? Yeah, the mock interviews, for people who want to see that, what Shiv's talking about is Monkey to Millions. There's I have a bunch of mock interviews there for the mentees that I mentored directly on the Monkey to Millions series that we do. So basically, that's me mentoring at any time, from 2 to 4 different mentees, kind of as they're trying to break into careers in finance, including banking, private equity, and whatnot. So check out that series. It's on YouTube and on iTunes. It's in podcast form. I think it's better on YouTube because you can actually see, like, when we're going through resume reviews and stuff like that. But how was everyone's 4th? Everyone have a good time? We just stayed put with the kids. Hey, what's up, SNL? Master Morales, what's up, guys? Thanks for joining. Shiv asked, can you do one with me? Hey, Shiv, I don't really do, I just have my small, is my volume low? Sorry, let me, I don't know why that is. Can you guys hear me okay? I'll try to speak up. So yeah, in terms of like specifics around, oh man, my train of thought. I need more coffee today. I can't even think straight. But in terms of the mock interviews and stuff, I typically only do a few people at a time just because I would get too busy. But we do have Wall Street mentors if you want to get a one-on-one interview. And it's pretty incredible because you can talk to anybody from like any bank out there. If you have let's say you want to have an interview, like an investment banking mock interview. It's not that expensive for like a 30-minute session, and it's going to be really realistic. And by the way, they usually spend more than 30 minutes with you, but they help you out a lot and make sure you're kind of ready for prime time. In terms of Damon's asking a question on YouTube. He says, hey, Patrick, for networking, I was wondering if it would be too cliche to ask about a firm's culture. Would it be better if we asked this indirectly? Damon, yeah, I think that's good question because a lot of people kind of have these generic questions that they like go to, and one of them is often like, how's the culture? Like, it's better to ask specifically more about how the deal teams are staffed. Do people hang out together after hours, or are people, and then you'll get a sense just from their answer what the culture is like. And you can also ask questions around like actual deal structure. How many analysts are there? How many associates, VPs, MDs? So is it top heavy, or is it like a normal pyramid structure or not? That's probably the best way to get a sense if it's top heavy or not. Let me see here. Okay, yeah, my mic's working. I think you guys can hear me okay. At least on YouTube. It sounds like Instagram. My volume's low. Yeah, I don't know what to say on my volume, guys. Let's try this. Still low? I'll just try to scream. No, just kidding. Question, pros and cons to break into private debt versus private equity. This is for Nicolo. Well, private equity, I think, is a little more interesting. I'm a little biased because I was in private equity, because you're actually looking for outsized returns. On the equity side, there's more risk, but there's also more upside. And so I feel like if you're going to build a career in private equity, it tends to have more upside if you join the right fund, if and you get some decent part of the carry. Whereas private debt tends to be lower returns, lower risk, but also maybe a little bit more stable and easier to work your way up. So pros would be private debt. If you really know that niche and you do it well, it's probably a little bit less competitive. Cons being the pay is probably a little bit more capped and more steady. Whereas private equity, if you can survive and move up, the upside's much higher. Other things being equal, like brand name and all that stuff. I think in terms of how interesting things are when you're on the debt side, a lot of times you're looking at like potential downside scenarios and just recoveries and making sure that where you sit in the capital stack actually is it protects your investment. So you care more about the downside when you're investing on the debt versus on the equity side. Yes, you care about the downside because you don't want your equity to get wiped out, but you really care about not just the upside, but how much of the upside is. So it can be a little bit more nuanced in terms of how much synergy, how much actual growth the private equity firm can drive. So I think it's more interesting because you care about really all scenarios. You care about the downside and the upside and the cyclicality of stuff. Assad said, recently started listening to the WSO podcast. Thanks for hosting exciting guests. Oh, cool. Thanks for listening. Assad, appreciate that. Let's see what we got here. Mehdi asks on YouTube. He says, hey, Patrick, I have a question. Do you think we should start sending our CV directly to the company for an internship or waiting to have an offer on their website or recruitment websites? Mehdi, not sure I understand the question too well. I think for an internship, it's good to be networking with people who work in whatever division you're trying to join, and have conversations with them. And then ideally they're asking for your CV. It's very rare for you to drop a resume into an online portal and to get a response back unless your actual resume is really top notch and your stats are top notch. So I'll just say don't expect a response when you're doing these online resume drops because it's rare that they actually come through. Somebody said, if you accidentally withdraw an application, can you use another email to reapply, or would your application be flagged? Rona, I really don't know. I don't think that's a bad idea to get more shots. If I don't think it'd be flagged, and if you haven't heard after several weeks, I don't think it necessarily anyone would get upset about that. Now, if you keep doing like 100 emails, different emails, and keep applying, that might get you flagged. But if you're not getting a response after the first one, you may want to actually do something better with your time rather than creating new emails and reapplying. You may actually want to try to talk to people at the firm. So, Ayman says, hey, Patrick, I guess you should change the live title. Ayman, why do you say that? So are you referring to the Daily Peel? So the Daily Peel, just for those of you who just recently joined, this is the new daily newsletter we're sending out about the investing markets. So stock market, crypto, real estate, you name it, basically NFTs, anything you want to learn about. We tend to cover anything that's ripe, what's rotten, and we try to have fun with it, make it a more entertaining kind of look at the stock market rather than boring. And it's not about just business. It really is focused on the markets. So, and then within a few weeks, we're actually going to be making another big announcement and launching a new premium kind of research and trading service called WSO Alpha, which is going to be get subscribers access to actually a real portfolio that's generated over 20% returns for the last decade. So we're super excited about that, and the team we've put together here at WSO Alpha is ready to kind of we're going to be sending out trade alerts, all that good stuff. And yeah, I don't know what the YouTube live title says. Let's see here. Is it wrong? Oh yeah. Thanks. Yeah, I guess it's dated. This should be Tuesday, July. Thank you. July 6th. There we go. I think I changed it now. Thank you. So yeah, in terms of what we're launching, we've been super busy. Been super busy over at WSO, kind of preparing for not just this daily newsletter, but also for WSO Alpha, which we're super excited about. I can actually show you guys on this a little bit, give you an idea of what it's going to look like. I'm loading it up on my stream for those on Instagram. So here we're going to basically be uploading our track record every single month to show, like, we're actually uploading brokerage reports so people know that this isn't bullshit, that this is actually real money at stake. So, and we're showing the average annual returns over from 2011 to 2021. It's a very aggressive portfolio, so it's not for everyone. It's not for people who are near retirement or anything like that. But we're super excited about this. We have historical returns all listed right here. We're going to be benchmarking it against other indices, an aggressive portfolio, the S&P 500, the NASDAQ, and whatnot, so people really get a sense of how we're performing. So it should be fun. It's going to be not easy for the team here that we're trying to continue this outperformance, especially now in these markets. It's just insane. Some of the valuations, we're seeing some of the air come out of the markets right now finally, but it's absolutely, some valuations are super stretched. It's a very dangerous place right now, but really people don't know where to put their money, and it's a really hard place to know where to put your money. You look at a lot of different assets out there right now, and a lot of them are just completely inflated. So it is tough. What we're trying to do is have a diversified portfolio both in growth and value and crypto, but in a way that's actually smart. It's a way that's not super risky in the sense of like irresponsibly risky, or not betting everything on Doge. Let's put it that way. We're going to be sticking with the larger names on our crypto allocation, which is relatively small compared to overall growth and value stock allocation. And then we also trade things like thematic trades. So like when the COVID crash happened back in March last year in 2020, if you look back at our statements, you'll see we sold out initially and then kind of bought back in some of the high-flying kind of growth tech stocks after they had been hammered. And that ended up being just a really great move for us. So we saw tremendous returns coming out of as we went through COVID, and the market just rebounded with the Fed just pumping billions upon trillion, even trillions of dollars into the market. And that's really where our team's biggest concern is inflation, and how do you hedge against inflation appropriately. How do you kind of don't want to have too much of an allocation in cash, because it's just going to get eroded away with inflation expectations increasing. So the real question is, where do you want to be if the dollar starts losing significant value and inflation starts picking up? And so I don't think there's any easy answer to that, because you look at all asset prices across the board, a lot of them are just very at historical highs. So you look at real estate, incredibly expensive, low inventory. Things are out of control there. There's not enough inventory to keep up with the demand. People are just incredibly low interest rates still, even though they've come up a little bit. Then you look over at crypto. Yes, about 40% of from the peak. It's been a nice crash to take some air out of the markets, but still with that, it's incredibly volatile. So it's a tough place to put too much of an allocation there to preserve capital. So yes, you can dabble in there, but it's not something we would advocate to like just go crazy long and put a huge percentage of your portfolio in. And then we have just the reopening play theme that I think has been played out. I mean, almost every reopening stock, whether it's Carnival Cruise Lines, the airlines, whatnot, have seen massive gains and are now most of them are trading above where they were trading pre-COVID, which to me is, assuming a lot goes right, especially for these stocks that are like dependent on like commercial real estate filling back up. And like, to me, there's probably a lot of dynamic shifts that happened with COVID that are not coming back to 100%. So do you really feel like, even here right near my house, with Apple and with Facebook and all these things, I don't think no one's forcing people to come back to the office 5 days a week. I think it's going to be like 2-3 days a week. And that has major implications when it ripples down through commercial real estate and whatnot. So I think it's really, it's foolish to invest in some sort of reopening play when the valuations are higher than they were pre-COVID, and we've kind of seen probably long-term huge shifts in behavior because of COVID. So it's a really interesting time to be investing. It's a really scary time to be investing. But yeah, that's kind of we're hopeful WSO Alpha can help some of you that are interested that might want to follow along. We'll kind of subscribe to it, and hopefully it'll help you in your personal portfolios as well. Let's see what else we got here on Instagram. Okay, which one would it be better to major in, finance, econ, or accounting? I'd say probably econ and accounting, or finance and accounting, like a double major, Tom, would be great if you can figure it out. Hopefully you guys can hear me. No audio. Man, I don't know what's going on. Here, I'm going to close it and try again because there's no reason why the mic shouldn't be working. You guys should join YouTube. I think the YouTube can hear me. All right, I'll be right back. All right, here we go. Let's go live again. All right, let's go back to YouTube, see if we have any questions there. Hey, Tyler. Damon first asked, how would WSO Alpha be priced? We're going to be starting with like a 2-week free trial, so anyone can kind of check it out. And then from there, it's going to be $27 a month. That's what we're starting out with, at least. Hi, Anna. All right, let me see here. Let me just get Instagram Live guys back. WSO office hours. I don't know what's going on with my mic there. Let's try this again. Should take me 2 more seconds. All right. Going back live. All right. Yeah, Damon, it would be a free trial for a couple weeks just so you can check it out, see what the alerts are like, see what the research is like. If you like it, great. If not, then no problem. You just cancel and move along your way. Tyler, how would you suggest someone makes the transition from deal advisory at a Big Four to investment banking? Hey, Tyler, it's a very common transition, and I think you're probably going to have a lot of opportunity if you're networking heavily right now. I think it's important to make sure you're staying around the hoop, meaning you're actually networking actively at the investment banks. That means middle market, that means boutiques, that means any way you can get into investment banking and get deal experience, you do it. So that includes talking to lots of analysts, lots of associates, trying to let them know that you really want to make the switch, and then making sure you're still doing well make sure you're still doing well at your Big Four. So can Instagram hear me now? If you guys can let me know if you can hear me. We were having major speaker issues before. Maybe not. Let me see. Can you guys hear me? All right, I just posted. Let's see. No worries, Damon. Thanks for joining, man. Hope all is well with you. Hey, Damon, where did you end up deciding to go? I know you were looking at Fordham, right? Did you end up coming Fordham? Oh, good. You guys can hear me now. Nice. Okay, so Instagram is now can now hear me. That makes this guy really happy. This guy's really happy now that you guys can hear. His ears are open. Let's see. Here we go. What else we got, guys? Anything else before we call it? I know I just joined again, so I don't want to end it right away. I can go for another like 7 or 8 minutes. But yeah, Tyler was asking about transitions to from financial advisory to from Big Four to investment banking. It's a super common track and something that I think everyone. It's been done like probably 1,000 times. All right, Chris says, generally, who has the power to refer candidates for an interview? Chris, oftentimes it's anyone in an organization can refer. I know at private equity funds, it would be like associates all the way up through MDs. Doesn't mean you always get an interview, but you shouldn't assume that junior folk can't get you at least a look for an initial phone screen, and then it's up to you on the phone screen to do well, and make sure that you're impressing and you're asking the right questions and not questions that are just generic. Somebody asked something. Damon asked a good question earlier, asking about, like, is it too cliche to ask about for a firm's culture? I think the way you phrase the question, if you're saying something like, what's the culture like here at XYZ, then yeah, it's super generic, it's boring. It's like, the person doesn't want to talk about the firm's culture. I think a better question is trying to get, if you want to get an understanding of, like, if you truly want to know about the culture, then it's asking more about, what's it like? Are there any mentor programs with, new hires? What's the general trajectory in terms of, like, analyst to associate promotes? Are people staying on past the analyst years? Ideally you're not asking, like, how many hours do people work? Better if you can get that information kind of by tangentially talking about, mentor programs, hours in the office, do people hang out, stuff like that, and then you'll get a much better sense over how people treat each other and what the culture really is like. And then if you really want to know the details of a firm, the best thing you can do is look at former alum that worked there and get them on the phone to have an actual true conversation. Or you can come to WSO here, and you can go to resources, company database, and you can jump in and be like, hey, I really want to know what it's like at Harris Williams. And everyone in the forums knows the joke at Harris Williams is that they actually have a great culture and they go to bat for their analysts. And so they help their analysts actually move on and find other careers that are better. So, and you'll see that in the reviews here that you read and all that good stuff. Hey, Keith, can I send you an email? Sure, go ahead. No worries, man. So if that's it, I may call it. Anyone else? YouTube, Instagram, anything else I can share? And so, like, yeah, keep an eye out in your inbox. If you want to subscribe to the Daily Peel, that's the new 5-minute market overview. You can go to wallstreetoasis.com/the-daily-peel-overview, or just look up the Daily Peel. You can Google it, and it should bring you to here. And there's an email form right here where you can join the list, and that'll get you subscribed. And then you'll be on that, and hopefully you find the posts entertaining. And you can actually read our first issue that went out today. It's right here under the recent topics. The Daily Peel is here, July 6th, 2021. So that's it right now. I think if anyone has any other questions, you want to send me emails, whatnot, I'll be trying to do this again next week. I know it's been a few weeks where I haven't been able to do it, just been super busy getting all this stuff ready, but keep an eye out for the Daily Peel in your inbox, and WSO Alpha coming soon. All right, everybody. Thanks so much.